The U.S. Mint has slowed down shipments of gold and silver coins because it cannot make them both at the same time, and it looks like they've chosen this coin to be sacrificed. Welcome to Silver Heist. Thank you to our returning subscribers and guests. We're a channel that likes to buy physical gold and silver, and we like a coin with a good story. If you like those things, please subscribe. I'd like to thank Doctor Who on Instagram for sharing this important news story with me. Bloomberg, July 27th, 2020, U.S. Mint has reduced silver, gold coin supplies to purchasers. The complex can't make gold, silver coins at the same time. Document. Mint is now asking authorized purchasers for demand forecasts. The U.S. Mint has reduced the volume of gold and silver coins it's distributing to authorized purchasers as the coronavirus pandemic slows production, a document seen by Bloomberg shows. The Mint's West Point complex in New York is taking measures to prevent the virus from spreading amongst its employees, and that will probably slow coin production there for the next 12 to 18 months. The document shows. The facility is no longer able to produce gold and silver coins at the same time, forcing it to choose one metal over the other, according to the document, which was presented to companies authorized to buy coins from the Mint last week. A spokesman for the Mint didn't immediately have comment. The pandemic created a whole new set of challenges for us to manage, the Mint said in the document. We believe that this environment is going to continue to lead to some degree of reduced capacity as West Point struggles to balance employee safety against market demand. The U.S. Mint, which makes gold, silver, platinum, and palladium coins that are sold through a network of distributors, has been producing commemorative and investment coins at a lower capacity since reopening the West Point facility and imposing social distancing early this year. The cuts are yet another blow that the pandemic has dealt to America's coin supplies. Just last week, the Mint urged Americans to spend their pennies, nickels and dimes and quarters, because the pandemic has cut in-store sales purchases and slowed the pace of coin circulation nationwide. The reduced allocations are also coming just as investors are clamoring for precious coins. Global uncertainty over the pandemic has driven silver and gold prices to multi-year highs, turning coins made from the metals into a retail safe haven. The premiums for some coins over the spot prices of the metals have surged to record levels. And then here's new heights. Spot gold prices touched the highest level ever on Monday, and that's here in the 1900 range. And you have to go all the way back to 2011 range in here. To cope with demand, the Mint is now asking dealers to provide their 10-day and 90-day forecast for demand for the first time ever. That will allow it to decide what products to make, as some are more labor-intensive than others, according to the document. If the Mint decides to make 1/10 of an ounce of gold, for instance, it must cut production of American Eagle silver coins. Okay, so what we're going to do is we're going to look at the gold and the silver. The gold comes in 1 ounce, ½ ounce, quarter ounce, 1/10 ounce, and the silver is in 1 ounce sizes. We've got data from the Mint from January through July of 2020, and we're going to compare it to 2011, which was one of the highest production bull runs of gold and silver. And it shows what is possible. And then what we're going to do is project 7 months into 12 months and then just show the percentage of that estimate to what was achieved in 2011. For the first 7 months, 412,000 full ounces. 45K, 64K, 210K. So, if you haven't seen some of my other videos, the half ounce and the quarter ounces are the least popular ones. We may like them as stackers, but frankly, the numbers in a bull market, it leans towards the full ounces, and then the 1/10 ounces are the next most popular. I was a little concerned about this one earlier, in that 3 months in a row they weren't producing any, which showed they were making some sacrifices between coin sizes. But in July they made 35,000, so you're going to see some 1/10 ounces on pre-order and available at the bullion dealers now, which I've already noticed. So they've made 13,668,500. So we'll just put that in millions. 13 million. And they had 5 million in the month of March alone. And then April, May. May was a very bad month for the mint across the board, gold and silver. And then in July, they made 1 million of this 13 million. So they're just starting to creep back in with the silver. Now, in a big bull market, they made 910K of 1 ounces. So that was their high mark. 65K of those, 82K. Like I said, the two middle sizes are kind of like Buick and Oldsmobile, and the game is all about Cadillac and Chevys. So 370,000 of the 1/10s, but for silver eagles, they made 39,868,000. So 39 million in 1 year. 910,000 ounces of gold in 1 year. And that's when gold peaked at 1900, and I believe that's also the same year that silver peaked in the 40s. So what the news article in Bloomberg was saying is that because of social distancing, because of other factors, I don't know if it's 2 shifts versus 3 shifts. I don't know if it's one production line physically in the plant versus another space that they can't have 2 lines running at the same time. But the article is saying they are having trouble. The article said they cannot make gold and silver at the same time. But they're saying you're going to have to sacrifice one coin for another coin. If you want more silver eagles, you have to sacrifice 1/10 ounce gold. So based on where they are, and maybe this is a reality check, and they realize they're in crunch time and what they're going to do for the rest of the year is subject to kind of the demand of the APMEXs of the world who places the orders. They're going to prioritize amongst these based off of what APMEX wants. But based on where they are now, if we project that into 12 months and then compare it to a big year, at the end of this year, they would be at 77% of the 1 ounce coins. For the half ounces, they'd be at 119%. For the quarter ounces, they're actually ahead again. They'd be at 134% production. For the 1/10 ounce coins, which really surprises me because it looked like they took 3 months off and did nothing, but really, based on where they are, they could get to 97% of a big year's production if they just keep the same pace. I think they ought to spread it out and not take whole months off and let the dealers raise the premiums, and then the consumer loses out. But the big number here is that if you project this 13 million into a full year of production, you would only get to 59 So the Bloomberg article said that the mint has to choose between gold or silver, or a certain size gold coin or silver. So looks to me that silver is the coin that is not going to be produced. So when push comes to shove, it looks to me that the West Point Mint is in the business of making gold, and the Silver Eagles will suffer. And they only sent a couple of 100,000 token Silver Eagles to Philadelphia, and all that happened with that is that it went to the dealers so they can make a collector's item instead of getting Philadelphia to contribute to significant numbers here. And frankly, Philadelphia and Denver are having trouble just making nickels, dimes, and quarters and pennies. It's up to West Point. They can't do both metals. So the mint has to choose between gold and silver, and it looks like it chose to make gold and not make silver. My advice, buy gold eagles and buy Canadian silver maple leafs this year, because this number is not going to get improved. If you want to see more silver and gold stacking, please watch one of our featured videos.